Recording. Hi, folks. I think we're live now. My name is Nikhil Joyce. I'll be your host for this evening. I'm part of the early founding team at Bureau and mainly look after growth. With me, I have Anil Tadimeti. Is Anil handles a lot of product and strategy for us at Bureau, but mainly when I was trying to hire Anil and we were trying to convince him to move from the RBI to Bureau or as we joke, bureaucracy to Bureau. The main reason we wanted him with Bureau was because every time the RBI sends some of these master directions or guidelines, or it could be any of these kind of sort of regulatory laws, right? It's super important to have someone who can help us decode this. And Anil's been doing that for us internally. And we thought this time when the draft of the master directions came by, especially on the cyber resilience and the digital payments security controls, we know it's a matter of time before it starts affecting not just sort of the larger banks, but also potentially sort of fintech. So we thought we should have Anil over on a sort of a webinar setting so that we can discuss this. Trust me, my role here is just to ask the questions. I'm really representing all of you here. So feel free to send in questions on chat so that I can ask Anil more questions. But Anil, thank you so much for agreeing to do this. Would love it if you could give us sort of a little bit of an overview about these latest guidelines and we can sort of get started there.
Thank you, Nikhil, and thanks everyone for joining in. We live in exciting times, don't we? There doesn't go a week without RBI coming up with something new, and usually gives nightmares to people we interact with in the fintech ecosystem. But if we look at the evolution of where RBI has been focusing its attention towards, and we can probably start with something which began a few years ago. Started with the initiatives on tokenization and digital lending guidelines. We've seen there is a concerted effort to strengthen the cyber security system, the infrastructure, and also safeguards, which make it more trustworthy, right, for the end user. And this is one of the core pillars, even if we look at how RBI has envisioned its goals for 2025 as encapsulated in Payment Vision 2025. Integrity is one of the core pillars, right? And to ensure that regulated entities who are progressively gaining more share in the financial ecosystem, they adhere to certain standards and promote that level of confidence. RBI has enunciated this, and it's an extension of what was earlier done for the bank payment system operators. And if we look at the salient features in this, it tackles aspects of governance and puts more onus on the board, the subcommittees of the board, and a nodal officer in the form of a CISO. Right? So essentially, RBI is now saying that cybersecurity is not a backroom function; it's a boardroom function, right? And ensuring that there is the standards that prescribe are monitored by the board and they give adequate attention, so that occupies a significant share of what the directions intend to do. But even beyond that, there are multiple such prescriptions on basic baseline cybersecurity controls to do with even identity and access management of employees. For example, they've specified that there should be multi-factor authentication. They've invoked the principle of least privilege. So the access to information is only on need to know basis. They have detailed network security, application security lifecycle guidelines to adhere to, have mandated automated mechanisms for monitoring these threats and also for reporting within specified timelines. But more importantly, if we look at it from the consumer point of view and what affects the end customer, is they have promulgated certain guidelines on how the emerging threats that we encounter today, we often hear of, or in unfortunate circumstances, know somebody personally who's been affected by it. is a lot of it has to do with, let's say, remote sharing apps, right? Somebody um, through social engineering convinces you to simply download it, and they are then privy to all the activity on your mobile, right? So this is something that RBI specifically called out for and said that when you are using a payment application, any such remote access application should be disabled, should be prohibited. So these are all controls from the regulatory standpoint, which can help infuse that level of integrity and provide safer ecosystem for consumers to transact.
Look, so uh, Anil, while at a higher level it makes sense, right? All of these make sense, and we could sort of see this coming. Given the amount of time you've spent sort of going through regulations like this in the past and today, I think one thing I've noticed is there's a changing trend from just a regulatory standpoint, where it used to be more of a reactive sort of a thing, where any changes would be made in a reactive fashion, to today actually the RBI and other regulators as well taking more of a proactive stance. Do you do you think, given the direction in which it's going, that actually regulators are asking for more innovation or leading to innovation? How would you sort of look at this?
Oh, absolutely. And I think for a long time, either because of let's say limitations of technology, or even with the traditional legacy institutions and systems that we had, there was a certain understanding of business as usual that would keep. But with the advent of fintech revolution that we've seen, and how it makes the access, it provides convenience, it provides even cost arbitrage to consumers. This has resulted in that explosion, and therefore now these are typically uh, unregulated, outside the regulatory ambit, but growing more in scope. And that's where the regulator is concerned about the effect that it has on the customer and end user, and whether they have the complete awareness of the way they are dealing with it, right? And it started, for example, with, let's say, digital lending guidelines, where there were concerns on predatory lending, on access to personally identifiable information, which is not relevant to the exercise of lending itself. So the regulator has come down on all these practices. And similarly here, in terms of if we want to understand like the effect that these directions intend to have. So uh, there was a committee that was constituted by the RBI, and the report came out recently. They some of the findings are stark in nature, that the share of digital complaints in the overall complaints that the RBI ombudsman receives has increased from about 15 to 20% 4 years ago to 40%. And then customers do not have an easy mechanism to report frauds. How do I know? Where do I go? What is the redressal mechanism? Right? And for example, that is something that's translated now into the directions we see today, where the RBI says there should be a portal mechanism, right? Whether you log into your app or you have a internet banking interface, that I can easily mark this transaction as fraudulent, and that's where my liability stops. And then essentially the system has to kick in. They need to block the affected instrument, whether it's a card, and then also try to recover funds from the beneficiary or the destination account, so on, right? And so there is clearly this move towards making things inclusive. And so another way to make it inclusive is, for example, like we often hear anecdotally, and we also know through data, that the elderly are more apprehensive, they're skeptical, they're fearful of losing money. So that and even about 40 to 45% of people who actually lose money, they are in that older population of say 55 years plus. So for them also, to make it easier to transact and to do it with confidence and assurance that there are enough safeguards. So these are definitely measures. The other aspect that we have seen happening in this space is there are, while somebody who's an entity who's affected by this may look at it as being onerous and detrimental to perhaps their business, in the long run it will prove beneficial for them, right? uh, the other aspect that RBI has taken into consideration is the proportionality, right? So the directions also indicate when the regulations kick in for different sizes of the payment system operators.
Yeah, I noticed that there's like a 2030, 2040, and like, there's different timelines at which these regulations kick in. But I mean, look at the room that we have here and the kind of people that we interact with almost on a daily basis, right? If I were a fintech founder today, I'd be looking at this and going, you know what? It's already tough to run a business. There's so many costs that I'm doing. I'm spending money probably with somebody like Bureau on doing like a bunch of like KYC or a bunch of other stuff already. Today, now you come in and you tell me that I have to do device fingerprinting, device binding, a whole bunch of other stuff. You're adding to my cost. In some cases, maybe you're also sort of adding to the friction of onboarding of a user. Given what you've gone through these guidelines, do you think, how do you think as a fintech founder, what lens should we look at this from? I know you mentioned the consumer protection angle, but otherwise, how should we be looking at this? And should fintech founders actually wait for them to come under this regulation, or do you recommend that start complying like right away, start actually getting ready now and don't wait for like that 2030 or 2040 to come in?
So, Nikhil, if we look at the spirit of the guidelines, right, and so while there are staggered timelines that entities who fall under particular bracket need to comply by, it is advisable that they do so earlier for the simple fact that, for example, if we talk of, let's say, device binding, prohibition of, let's say, access to remote, control applications, these, in fact, have, in my view, less friction. And so, for the simple reason that if we look at the way authentication and RBI views it, right, RBI has time and again voiced concerns about the vulnerability of SMS OTP as the additional factor of authentication, right? And most applications today still use a static means to enter the ecosystem. It's through password, which is something that a user knows, a knowledge based right, factor of authentication, whereas device binding is something that happens in real time. It's happening at the back end, it's more passive, so you have all the additional safeguards which will trigger that alert to you in case you find some anomalous behavior, but does not pose additional friction on the user, not asking them to enter some other, let's say, secret code. For example, many a time we wouldn't even remember, on during onboarding stage we will enter certain things that, okay, what was your favorite childhood memory, which is your favorite, let's say, cricket ground, right? I wouldn't remember the answer to it. So moving away from those to newer forms of technology which include device binding, in addition to that, behavioral biometrics, which are closer to what the user is doing in real time, and also authenticates that user is in possession of whether it's the device, that person is the one who is transacting. So these are more passive, they are more consumer friendly, and does not put obligations on the user to memorize these things. And also that exercise itself would be quite cumbersome, and also lead to more possibility of sharing, right? Password sharing, I share it on my notes, I share it on a piece of paper, all these things which will lead to the scope of frauds being perpetrated.
No, that makes sense. But like, given the given the categorization that the RBI has put, right? Like, I think it's large, medium, small. Um, Especially if you look at sort of non-bank PSOs, so to speak. In your view, what does that ecosystem sort of evolve like? How many of those are we seeing? Like, what's that growth like? And how many people are actually going to be impacted by guidelines like this? And I mean impacted in a positive way.
So, Nikhil, purely if we look at the non-bank ecosystem that's grown over time, and it includes a wide sphere of players. which has your PPI, players, which has your Bharat Bill Payment Operating Units. It has white label ATMs, and the large ones, of course, will be like CCIL, NPCI. Right now, for example, NPCI, UPI, they make up more than 50% of our retail payments. And last month in May, UPI recorded 9 billion transactions. So we are talking of a humongous volume shifting in terms of right, to move from traditional, whether it's a check or other forms of payment systems, even otherwise, the ones that are regulated by RBI, RTGS, NEFT, from there to the retail payments. And today we have plethora of entities in that space. For example, payment aggregators were not under ambit of RBI strictly for before 3 years, right? And then RBI started this process of giving licenses to them, and there are more than a dozen who received so far, but there were about 200 who submitted applications in the initial phase, right? While the RBI still is reviewing these, scrutinizing, and so that's the share which is now moving from banks purely to these non-bank PSOs, and then even so here is the interesting thing, right? Purely if we look at how many of these transactions are coming from, let's say, mobile devices. So in last 2 years, that increase of users using mobile, login and transactions is about 80%, whereas for the other, it's a web-based journey that's about only 20%. So this is significant because India follows, like, we have about 84 crore, smartphones in the country. We have about 70 crore, people who use internet. So this number is only going to increase, and obviously that's where the fintech sit, right? And they're more consumer friendly in the sense my onboarding is easier, my transactions are easier. I have a dashboard where I can view all this. So there is, in let's say about 3 years from now, there's a good chance that this number from, let's say, low double digits will increase to about 25-30%, where even RBI is expecting that 50% at least annually there will be growth of the mobile based transactions.
Yeah, I think you bring up an interesting point, right? Like if you just look at technology and sort of innovation in India, and if you look at sort of a global picture, one thing that I've sort of noticed is, if you look at the US, for example, right, the fintech innovation and financial innovation in general has been linear. Also because technology is linear there. India has these leapfrogging moments. If most of the people within our circles, there are a lot of people who didn't even get a desktop, who never used a desktop browser, but smartphones and feature phones and smartphones very, very quickly caught on. I think reducing the cost of internet access, especially 3G and 4G data, and now with, of course, 5G data, that leads to a certain democratization. I think one thing that I noticed while going through some of these guidelines, of course, at a higher level, is exactly like you mentioned. I think the RBI has taken cognizance of the fact that mobile-based payments are higher. Of course, you also see other bodies within the India stack, so to speak, pushing for higher number of UPI payments, and it's like now promoting ONDC and a whole bunch of other stuff. But if you look at UPI-based frauds, the number is pretty high there. You see a lot of sort of fraud being reported there. In some ways, when there is convenience, the ability to game the system becomes higher as well. How do you think companies today, whether fintechs or whether BFSI companies that are all tech enabled today, right? Like I sometimes think that fintech is a misnomer, because I don't know if we have any representatives from larger banks here today with us. But some of the larger banks today, especially the private ones, and even some of the public ones, they have larger and probably better technology teams than some of the fintechs, and are using more technology there. How do you think they should think about this question of friction versus convenience versus consumer protection, all of this while complying with sort of within the regulatory framework? Like, how would you go about it if you were in their shoes?
That's an interesting question, Nikhil, and I think it's a conundrum that the fintech, whether it's a founder, whether it's somebody CXO, they would always encounter. Right? While I need to ensure that I'm growing, I'm attaining critical mass at the same time, my fraud, let's say, rate is contained to a minimal amount, and I know that people who are using it are also getting that reinforcement that I need to stick on to it. Right? There is also the aspect of loyalty, retention to it. So. In this day and age, convenience occupies the cornerstone of what we do, right? And whether you call it the lazy economy, whether it's just the behavior that has changed, that has enabled this, and so that is a secular trend that I see, and which is something that whether it's policymakers, whether it's private enterprises, or as you said, even government-owned enterprises are moving towards, because this is something which is perhaps going to continue, right? In that sense, while that will always be concomitant with some of these, modi operandi, which will prove to be detrimental to the health of the entity and the fraud levels. The simple prescription is that there are ways and means in which these checks can be added without necessarily resulting in drop-offs or friction to the customer, right? And so that means, which is essentially, as we spoke about earlier, if you have the call to action for a user needs to be minimized. The user can't be prompted multiple times in terms of sending different OTPs for different purposes, one for login, one for transaction, then, which is where there is a way to weave in alternate authentication mechanisms. We've spoken about device. Earlier, we spoke about behavioral biometrics. There are silent authentication mechanisms that are available. So all these are ways in which you can ease that journey to allow somebody in, right? And then once you move to, let's say, the transaction phase, and then so that becomes again a friction point where you need to have a dynamic, authentication mechanism, which by default today is SMS OTP. So again, there are workarounds for it where, through silent means we can do it. And it's also incumbent on players where I think, given that there is certain also leeway given by the regulator for threshold of payments where they are allowed to, let go of that second factor of authentication, right? So, but a lot of them still do not easily uh, implement it, right? For the fear that there could be a regulatory stricture bearing down, right? But I think as long as we operate within limits of what is prescribed by the regulator, then that is something that the regulator will not scorn on, right? And what we have seen, even at bureau and otherwise in the ecosystem, is, right, adding friction is uh, not an effective way of trying to curb fraud, because the fraudsters can always game the system, and they have more, let's say, patience, or they're more smarter and they give more time, right? It's not a user who's while user has genuine intent, genuine user has uh, for sake of convenience, there are more being drifted towards, but a fraudster has the entire day to figure out the way each application works, and he or she can easily break into some of them, which is why there is need for more to be done at the back end, rather than ensuring that the user is the same person through brute force means.
Yeah, yeah, no, 100%. And I actually, in this regard, part of the onus also lies on sort of technical service providers like us to educate the fintech ecosystem, the BFSI ecosystem in general, about the realms of sort of possibility, right? Like, for example, I don't know how many people on the call fully understand what the power of something like a device fingerprinting or a behavioral biometrics is. I'll take a stab at sort of explaining some of this, but feel free to jump in, Anil. I think as a former developer myself, right? I remember an era where mobile developers used to get access to IMEI numbers, right? So fingerprinting was a no-brainer. It was not even required because Apple and Google and other OEMs would give you access to the IMEI number, so you could uniquely sort of identify that, hey, this is device A and person A has come in using this sort of login details. Where I think the whole Jamtara ecosystem was able to burgeon was because 4 or 5 years ago, for multiple sort of reasons, the OEM started pulling access to IMEI numbers. And hence today there is a need for somebody like us to sort of potentially sort of come in and build a fingerprinting solution where we take into account, say, I think in our case, it is actually about 200, 250 different parameters that you take into consideration to create one single unique fingerprint. Uh, that persists across multiple logins, especially if a fraudster is factory resetting their device or something of that sort, right? Because they always keep finding ways to sort of break the system. What we've now realized, and rightly, like you rightly mentioned, right, like that fraudsters have more patience. They're always evolving. They're always thinking of sort of new ways in which they can innovate and sort of break the system. So user fingerprinting also becomes important in the context of account takeover. Say I was able to get access to your phone in some way. The most important thing for somebody on the other side, someone who's building the fintech app or the BFSI app, to know is it actually Anil who's using the app at that moment? And for that today, what we are able to sort of determine is, the way you hold your phone versus the way I hold my phone, right? Like the pressure patterns when I'm typing, the hesitation that I have while I'm typing a name that isn't mine. For me, typing my email address or my phone number is muscle memory. That's super easy. But the hesitation that comes in when I'm copy pasting from somewhere else, if it's not actually my data that I'm sort of inputting in the device and all of that sort of stuff, right? Uh, I think those factors become more and more important. What's encouraging to me is that a regulatory body is staying abreast of all of these technological developments and in some sense recommending, suggesting, but also giving enough time for innovation to sort of actually protect the end consumer, which I think as an economy, we are super lucky to have a regulator who's actually fostering innovation rather than sort of curbing it.
Yeah, Nikhil, I think you put it succinctly, and so even when we speak to prospective customers, and we typically hear of the challenges that they have, right? And then it's interesting, even the fact that you mentioned hesitation, right? Now that's something that is difficult to capture using traditional methods, capturing using rule-based systems, right? And while some of those on the anvil new age technologies help you do that, and even a simple trigger like alerting, it could be an in-app notification, it could be an SMS, but indicating that you are conducting a financial transaction while you are on a call. Are you sure you're doing it? Are you doing out of your will? So that itself is enough of a prompt to dissuade genuine users from going through in these circumstances, and thereby preventing fraud, right? And even traditionally, when we look at fraud monitoring, it was more reactive, right? After something has happened, I'll try to investigate, then I'll try to recover. Typically when these happen, it's engineered in a programmatic fashion, or the fraudsters are clever enough that it's never going to be just one beneficiary account. It's going to be dispersed among multiple accounts. It's going to be withdrawn even from that account from ATMs and all that. So time is of essence, timely reporting is of essence, and therefore, but mitigation, probably should begin with prevention, right? And that's where this is quite effective. So, but it's always going to be a cat and mouse game, and at least with the recent, guidelines that have been issued by the RBI, they seem to be aware of the fact that there is prevention at hand that is possible, and that does not require expensive investment. But that can materially change lives of the regulated entities and their users for the better.
No, I think that sort of hand in hand cycle where there's innovation happening from the industry, so to speak, while the regulator is sort of supporting it or recommending it. I think that becomes super important. I think Vikram has a question in terms of the recent RBI guidelines related to CKYC, it was sort of deemed as potentially high risk. What could the impact be on the fintech industry? Because CKYC, as you know, was used by a bunch of folks.
Yeah. So Vikram, if I may, the idea behind having these right additional checks or treating customers as high risk when they are undergoing a non face-to-face customer identification procedure is that the RBI wants to ensure, while they are perhaps not necessarily questioning the authenticity of the documents, because that's something that another regulated entity used while onboarding the customer and then uploaded. That is what you're downloading. What is there are two concerns with it. One is just probably the quality of documents, and given that we have a number of mule accounts that are being opened, or because there's also the concern related to identity documents which are freely available due to some data breaches that have happened earlier, or even our general behavior of getting documents photocopied, right? So there is that possibility. The other aspect is, while those documents itself may be genuine, the fact that it's the same person who is now providing that, let's say through the CKYC identifier, is providing that, is doing things in real time and willingly, is something that the regulator is looking for, which is why there is that explicit mention of VSIP being that on par with face-to-face customer identification, and being the go-to mechanism where it is being deployed. So that's so I what I would hazard guess in saying that while we see that VSIP will be more in vogue and will be implemented by more in entities, even fintechs, right? It's a there could be some changes even there on the anvil, which could ease the process, because there is a certain amount of friction today even with the VSIP process. But so the what could happen is that while VSIP remains, there could be certain, as we mentioned earlier, passive controls that can help you understand that it's the same person, he or she has the documents that providing, they are doing it in real time, and they are fully aware of the documents that are being submitted. So that's something that can happen. But it's perhaps also an offshoot of what we discussed earlier, in terms of when there is certain right emphasis given to let's say growth or other means, and then that's where fraudsters now try to gain access to the system and then game the system. So these are ways to curb some of those malafide activities.
Anil, but from a cost perspective, right? Obviously, in-person visits are the most expensive, and contact point verification, while deemed necessary in certain cases, has been super sort of high friction, high expense. And of course, VSIP is one direction in which you could go. Do you think it's something from a regulatory standpoint? Is that something that the RBI takes into consideration on behalf of the industry itself, that how much of a cost they will have to bear when it comes to any regulatory changes or compliance changes? And I know there's enough time given. It's not like you're being told something and the guideline has to be adhered to the very next day. But is that a factor that goes into the minds of the people who are writing these sort of drafts?
Oh, absolutely, Nikhil. Because ultimately, the resilience strength is indicated by people who are part of the system and are operating on sound principles. Right? And then there is the intent is always to do things in a manner that does not disrupt, right? Which is why there, for any guideline that is prescribed, and even when we talk about the regulator being proactive now instead of being reactive. So first thing that usually happens is there are draft directions, right, which indicate what direction the regulator is heading towards. They elicit comments, they are open to feedback, and then based on the feedback that they receive, based on certain concerns that the entities express, they will have a method of consultation, right, after which this is finalized. So cost is definitely a factor, but If you look at the regulators' point of view in terms of especially KYC, it's not just KYC, right? It's also money laundering, financing of terrorism. So when these are interwoven, so there the onboarding is the most effective way to ensure that only good actors, right, become part of the system and they transact. So that's where there will be a certain amount of friction that the regulator desires for, as I mentioned, ensuring that the integrity of the financial ecosystem remains. And we've also had instances, especially in last, let's say, maybe 2 or 3 years, and perhaps COVID contributed to it, where instances of people who've not applied for loans, but they have it right reflected whether in their CIBIL score, or they have agents calling up and saying, you owe us this much, so when are you going to return, without them obviously being oblivious to certain things that are being carried out under their names, right? So with certain unscrupulous actors, there is always the risk that the regulator will come hard on everyone not able to differentiate. But in the overall scheme of things, even with respect to some of the recent changes being done to the KYC, right? For example, if there is this positive confirmation that is mentioned, right, in terms of you seeking that the person actually lives at the address where he or she, has professed to be, right? And then, so there are non-intrusive ways of doing it, while an in-person verification is a possibility, but it comes with logistical challenges and also adds to cost. So you can seek that positive confirmation from technological solutions, which will provide you fact that this location is where the user is at and has stayed for a certain period of time. That can be relied upon, and therefore, so that's something that is deemed to be safe enough for you to onboard the user.
Yeah, no, makes sense. Folks, if you have any questions, please feel free to raise your hands and you can ask your questions, or you can leave them on chat and I can ask them to Anil. Anil, while we wait for sort of more questions to sort of come in, I think from a device perspective, right? I think I see 2-3 points that have been sort of brought up. One is, of course, the remote access apps bit, which I assume is a reaction to social engineering related frauds that are happening. Secondly, I think the online sessions, I think the PSOs have been advised to make sure that there's an automatic termination of an online session, especially on mobile phones, after a certain period of inactivity, which is something that as users we are very familiar with when it comes to a few apps already. And third, and most importantly, I think the device binding or the fingerprinting aspect, where device plus SIM both are sort of bound. If you were to venture a guess, given the framework that has been provided, do you think PSOs are already ready? Do you think there are PSOs who are already doing this, or is it going to take some time and some help from potentially players like us for them to sort of get up to speed here? How would that sort of work?
Nikhil, that's an interesting question, because if I were not connected with Bureau or with the fintech ecosystem, or maybe if I were, but and let's say I was not at the RBI earlier, and then I'm reading this NU, and then obviously that will pique my curiosity, and then that curiosity usually leads to now a sense of fear in terms of what the technology is, how do I implement it, what is to be done. But if you look at the mechanism, the way to do it, and how you can place those markers right from device, so the technology is something that's already present on your mobile devices, and these are different parameters to capture, right? And for example, you mentioned that we are doing 200 plus. The simple reason is that now depending on only a few of them is not a foolproof way of ensuring that binding, because there are always workarounds. Let's say something is jailbroken, right? And there is a parameter that will change, that will then render it futile if you want to check, right? So which is where this comes into picture. But there are those who are, and in circle that we usually interact with, some of the larger ones have implemented, and despite that, if there is that apprehension of what it means and how it's going to affect the end customers, then I think the message is that it will promote that resiliency and ensure, as we've also mentioned earlier, it's more passive, right? Everything happens at the back end, and there is no friction, there is no inconvenience that is caused to the customer in this case. And for it's not, so the other aspect is here on how I can start with something like device but use more of the features, right, while fingerprinting, and we have made a robust mechanism to identify that and to ensure that the fingerprint is persistent, the fingerprint is accurate. But beyond that, spoofing is another aspect, right, that the guidelines ensure that any form of location spoofing, right. So all these are perhaps little difficult for the PSOs to do it by themselves, and that's where they can obviously seek help of players like us who can collaborate with them and ensure that the end users experience is still the same, but they have better controls and they are able to prevent fraud.
Yeah, no, makes sense. Surmised as much, actually, for sure. I think the build versus buy decision is typically a hard one, but if there's anyone on the call or listening to this or watching this recording later on, we're always a ping away, both from a helping you decode some of these guidelines perspective, but also helping you actually, you know, go through the draft and actually be compliant with it. So anything to do with compliance and fraud prevention, we're always a ping away. On Twitter, we are at Bureau Identity. Our website is www.bureau.id. Thank you so much for being an engaged and engaging audience. Anil, thank you so much for spending all of this time helping us decode this. I think one thing that we should certainly do is perhaps convert this into a text format as well and have a blog post or something of the sort out on the Bureau website. Some of you can look forward to that. And please feel free to send in questions to any of us via our website or our email addresses. I'm at nikhil@bureau.id and Anil is at anil@bureau.id. Thank you, folks.
Thank you, Nikhil.